It's time. It's time to get started here this morning. Ooh, we've got just about 3 minutes and 30 seconds to go to the cash open. It's Don Kaufman here. Welcome, everybody. This is day 3 of the camera being turned on. It's freaking early here, right? 6:20 something in the morning. It's not a good time to have the camera on. First day I'm dragging a little bit. Had a kid keeping me up late last night. It's not good. It's not good at all. SPOOs this morning are down just about 12 handles here again on this Tuesday morning. A lot to discuss, however. Bonds are on the move. The dollar is really moving in the overnight trade. That has everything to do with Bank of Japan. NIRP is officially over. NIRP has ended. Boy, I'm just happy I get to be on first and I get to talk about NIRP first thing in the morning. NIRP is over. Let's talk about that after the cash open. Right now, what's moving markets? If you missed it, there was a brief and fleeting, amount of sell side activity here. We actually traded right back down to where we were on Friday. This is a 30-day 1 hour. And again, on Friday, we traded into kind of an area of congestion on Friday, which is somewhere around that 41, 80-ish. We'll look at the level specifically because I have a couple levels specifically to discuss. Anyway, there's a hint of sell side activity in the air. And I say it's only a hint. NVIDIA this morning is slightly lower. But look, I know you guys see the marketplace rallying back up. SPOOs were actually down 30 handles this morning, and they've rallied back up. And you look at it, it's going to be a rally. Listen, you don't know what it's going to be because NVIDIA in overnight trade has been rather wild, and it feels like it's going to get hit with some sell-side activity in here into the open. And again, I'm just going to give you for what it's worth. Feels like this thing's actually going to get sold. They might be lining up at the door to sell that. Right behind it, Google, which had a wicked bid yesterday. The bid actually continues to some degree. Here we have Meta. Now, Meta's quite interesting. See, you're looking at the Nasdaq. You're like, how come it's only down 85, 86? Look, Meta is a big boy move this morning to the downside in just the last couple of seconds. As I said, there's much more of a hint of sell side activity in the last couple of moments before this bell goes off. Again, Google with a bid, Meta getting hit, NVIDIA taking somewhat of a hit. Microsoft, however, they're rotating maybe towards it just a little bit. We'll see. Again, this is going to be a very sloppy, fast cash open once again. And everybody's kind of, running scared a little bit because the Fed announcement is coming out. If you haven't seen Bitcoin, specifically all crypto, it's getting hammered this morning. It's one of the biggest down moves we've seen as of late, but that's starting to become a little bit trend worthy. We're going to come into the cash open. As I said, you look at the S&Ps and you're like, they're trying to claw back. They're trying to go positive. This could get a little bit more wild. Again, the bonds are all over the place here in the last couple of seconds as well. Look at the bonds, 153,000 contracts. The S&Ps are only doing about 220,000 contracts. A lot to actually play out here. Advanced decline line. Well, it's going to be much more sloppy than it was at yesterday's open, which was correlated, but let's come to today's cash open. So into the bell we go. As I was saying, sloppy, and sloppy is exactly what you're looking at on the screen. Huge move in Meta in the first couple of seconds of trade. I just happened to glance down at that. This thing was actually getting offered. I mean, we were trading, 486. There's huge moves, $2 and $3 moves per minute. In here in the pre-market, as the bell just went off, this thing just jumped by about $4 higher than lower, all over the place, and it's actually wreaking havoc in Nasdaq in the first couple of seconds of trade. Take a look at that candle. You just traded the 30 handle and the 52 handle all in the first couple of seconds of trade. Gotta love it. Anyway, with that being said, NVIDIA, as I suspected, would see a little bit more sell-side activity right out of the gate this morning. I think it's worthwhile. We're going to be looking at some of the order flow at NVIDIA, and the order flow specific to the options market. There's a lot of traders that I've been talking to that they're sitting here waiting for those puts to start to be purchased. not exactly sure why everybody's waiting for that, but there's definitely calls being sold in here. So people are blowing out of positions, it looks like, early on in NVIDIA. This should account for a bit of more of a down move. Again, you should see some more sell side activity coming to the S&Ps. We're going to retrace maybe a little bit lower here in the first few minutes of trade. What I see specifically on the screen, we look like we're hitting tech pretty much across the board. You know, Apple, say what you will, but it still had the crap beaten out of it. Even in yesterday's rally, it's already being faded. That's yesterday's rally being faded. Interestingly enough, Google, which had a bid in the pre-market, a big bid in the pre-market, looks like it's actually going to see some slippage as well. There's not too many pockets of strength in here. There's an attempt to rotate maybe towards some of the financials and towards the energy sector. They're just basically flat. This advanced decline line is a little bit misleading into the open. There's a lot of stuff on the screen that's kind of flat. Again, very sloppy into the open. But the one thing that you can see is some of the big tech stocks not getting exactly like slammed, but you do have NVIDIA and Meta, which have driven markets substantially, continuing to take some lumps on the head here in early trade. You know, it's not that, you know, Meta is even going down. It's just not going up anymore. And as soon as Meta and NVIDIA kind of stalled out, now you can actually put this, if you look at auto expected moves, you can put the stall in NVIDIA to the last 3 weeks. Ironically enough, you will then see that the S&Ps, okay, they're not moving up anymore. And that's because, as we had commented many times, it's all NVIDIA. Speaking of NVIDIA, look at this. Got a bid back under it. I'm not sure, though, that's going to last. I'm relatively surprised to see the bid, though, back under NVIDIA. Yeah, I'm jumping around a lot here in early trade. Holy crap, look at this. Call buyers, once again, coming out swinging in NVIDIA. I don't think that's going to hold up, okay? Again, I think you're going to see NVIDIA roll back over here in the next couple of moments. And I'm basing that there was a flurry of call order flow that's coming in here. I can't help but to think the little bid to the marketplace is giving an opportunity for people to sell into. So, you know, hold that thought into the first few minutes of trade. Let's talk about the broader market for a moment. And the broader market being NVIDIA, no. Talk about the broader market for a moment. And some trades that, look, I'm going to be doing a couple of trades throughout the course of today. For those of you in the TheoTHETA small, TheoTHETA large portfolio, I am going to roll some stuff prior to tomorrow's Fed meeting. I want to say that again. I will be rolling prior to the Fed meeting. There's a little bit of angst around it, and there should be, right? So I'm going to roll prior to that. I was, you know, if we get some sell side activity here as the morning progresses, I think that the rolls will go off at better prices. We'll see what kind of comes of that. You know, Sav in chat was talking about the NVIDIA, you know, CEO. Yeah, look, it neither here nor there. Okay, he did his little dance, song and dance yesterday. I'm not buying the stock. So buy the rumor, sell the news. We'll see. I mean, look, you gotta stop focusing on that crap, because not only is it one stock, but the news yesterday, doesn't matter what you think of it. You can see what the marketplace is saying. Okay, you know, I think a lot of people, they have to tune that crap out. A lot of the crap that's on right now, you got to tune it out. When somebody comes on and cheers the stock, something to that magnitude. Nevertheless, NVIDIA, I really suspect not only is it going to cross through this 860 level, I think we're actually going to test a little bit lower today. Today looks to me to be a day where we are going to start to see NVIDIA take a little bit of a bigger hit. But the concern right now to me is less NVIDIA. And again, I think we'll crest through this 860 level maybe in the next few minutes as we push lower. The bigger concern in the room, though, today is going to be right here inside of Meta. There's some real selling right now inside of Meta, 2.5%. And again, say what you will regarding Meta. It is flat right now on the week. However, the fact of the matter is Meta, okay, has stalled out for a pretty significant amount of time, has not tested lower though, really at all. I mean, last week, yeah, whatever, was down last week, but hasn't really taken a more substantiated hit. And I would think that that would do it in accordance with NVIDIA. So the two of them lately have been rather joined at the hip in terms of some of the price action, where NVIDIA has kind of been the leader, but today, again, Meta taking a slightly larger hit, although that could be flipping around. I am also interested in heavily in both, well, Amazon, which is also flattened out. Amazon looks a lot like Meta. If you guys are into technicals and so forth, Meta and Amazon look almost identical. Again, all of your major tech stocks, though, once again, to kind of quantify this, look what Amazon has done the last couple of weeks, and the answer is nothing. You're now a month into absolutely no movement. Now, granted, we haven't per se tested lower yet at all. And if you're looking at this and it almost feels like sell side activity, well, think again in here. This is the Nasdaq. It's obviously the Nasdaq 100. It's easier to look at the Qs in my opinion. I'll look at the QQQ again. The Qs, for them to really, if you will, test lower, I think you have to come back specifically back to levels in about 420, which would be through the lower edge of expected move this week. Again, last week, the QQQ almost tested in the lower edge of expected move. And again, what I'm calling for is, to really test lower, you got to test right into this 420 level, which actually held quite a bit of weight for a substantial amount of time. I want to bring you back because as the S&P start to slip just a little bit here, it's kind of, I wouldn't say hoping for this, but some levels that I was looking for, and I mentioned this in the pre-market. Okay, what you're looking at, let me zoom out for a second. I know I'm jumping around a lot here in the first 8 minutes. There's quite a bit, though, starting to go on the screen. The advanced decline line is a pure 50-50 over here, and I keep saying it's a little bit misleading because most of your financials are kind of flat, mildly up. There's still just a hint of a rotation going on. And what you got to be careful of, I'll come back to levels in a second, but I just can't stress this enough. So you have this day that's starting to see just a little bit of sell side activity. And I'm going to tell you right now, the sell side activity, okay, that's coming through right now is almost exclusively big tech. That's it, right? You have Nasdaq right now that's taking a bit of a hit. Everybody have to kind of agree with that one. Good, because the financials, they're slightly up. The energy sector, okay, has a bid under it. By the way, I keep reiterating, the energy sector, this is a wild bid to the upside. The energy sector has had no love whatsoever. It's now up 8%, okay, on a year-to-date basis. You're just, mid-January removed from it being down 6%. This is a phenomenally large move. It's also a phenomenally inflationary move, right? So, okay, what I'm trying to point out is all the price action that you're pretty much seeing on the screen right now, okay, is lo and behold, nothing but tech, okay? Tech is actually dragging us down. Look, the Nasdaq, you can see the lows on the screen. We're about to cross through them. Overnight lows are going to be hitting the Nasdaq. We're just going to keep going right now. NVIDIA, there's that print that I was looking for through the 60 level and then some. So NVIDIA is actually printing a little bit lower, kind of anticipated that. As I said, order flow kind of looked like people were bailing out of calls this morning. But the reason that I'd be a little cautious today, okay, the advanced decline line, one of the things I keep reiterating day in and day out, this is so freaking far from correlation. Look, the advanced decline line is actually getting better with a marketplace that's been declining, okay? Now, we're nowhere near the overnight lows. The overnight lows, we traded 30 handles lower. We're only halfway home to that. But the Nasdaq is diverging a little bit lower, okay? The problem that you're going to have is you're going to see this advanced decline line. Like, again, you can literally be in a situation where there's 70-30, but the S&P is down 20, okay? This is not good because we're really close right now. And I'll show you why I think we're really close, but we're really close for the advanced decline line flipping, okay, and everything starting to correlate. We saw that correlation briefly, ironically, to the upside yesterday. And I don't give a damn whether it's to the upside or the downside. The problem that you've got on trading sessions like this is you're going to have a day where, there's 70 advancers and the market is down 20. And again, that blows people's minds when I say stuff like that, where the advanced decline line, it's 70-30. Those S&Ps are down 20. And all of a sudden, we start to correlate, not to the upside, but to the downside. There's 70 other products that can take this marketplace down. One of the risks that you are assuming right now, okay, in this marketplace is lack of correlation. And we saw it again for a brief and fleeting moment yesterday. So I'm going to tell you it's closer and closer. Now, why am I concerned expressly today? Like, look, you got to think about this bigger picture here. Why am I concerned today? Does it have to do with the Fed tomorrow? Hell no. Okay. Does it have to do with anything other than the fact that you just have to look over at volatility? Okay. Volatility sees something again, right? Now we've seen this day in and day out. Markets are not selling off really hard, but look, every day, and again, I know that there's a Fed meeting. I know, okay? But the volatility has been extraordinarily consistent, okay, in going higher in a marketplace that hasn't necessarily been progressing lower, right? The entire year, you can actually see it's trend worthy. The crazy thing is this kind of volatility right now in the mid 14s, okay, you're seeing a mid 14 vol with a marketplace that it's not really going down. Okay, the market's not really going down. It's not going up. By the way, this is a gap because, just so we're all clear, this is a gap higher because of a contract roll. If I came in here and I went, over here, and I go over to futures and I go adjust for contract changes, watch when I hit apply. I'm going to hit apply right now. Okay, right now. Anyway, when I adjusted for contract changes, I wanted you to see. So the market's stalling out. It's not coming down. Volatility is really building. And the reason that I would have real cause for concern right now is positive advanced decline line spoos are off. We just haven't seen a day where everything just kind of implodes quickly upon itself. And we're doing one hell of a job though right now. That's why I said, by the way, a moment ago, I wasn't trying to pick on anybody, but stop with the whole, all the CEOs coming on, CNBC. No one that understands this business gives a damn. Okay. You think anybody, all right, that's in any type of dispersion arbitrage gives a crap about like NVIDIA's CEO. They don't even know it has a CEO. They just trade. You guys have to detach yourself from what you think a company is and trading. Okay. If you don't detach yourself, you're going to look at this thing and go, chips really matter. Nobody cares about chips. Nobody cares about chips that trades, right? I mean, I find it interesting. Okay. I find chips very interesting. I'm talking about like GPUs and stuff. I find it interesting. That has absolutely no bearing on trade. I always try to tell people, I haven't talked about this probably in, 5 years or so, but I'll tell you a quick story that I think is worthwhile. When I first started trading back in 1998, okay, when the dinosaurs roamed the earth, it's actually really funny when I talk to my own kids now, or, they're old enough to understand. But one of them, specifically my 11-year-old, calls everything the olden days. And I'm like, damn it, I used to say the same thing when I was a kid. He calls everything the olden days. He's like, yeah, the olden days, okay? He's like, you told me about a 1992 Super you always wanted, which, by the way, I never had. Anyway, back in 1998, which, according to my kids, is the olden days, I got out of college, and right out of school, when I started trading, I told them, I go, oh, you should let me trade like biotech stocks, okay? Because I understand that stuff. And they go, that's exactly why you're never going to trade it, because you actually think that you understand it. And that has no bearing on what we do here. They always said that. By the way, I did a degree. It was in hard sciences. So it was like a natural thing. Like I wanted to go trade at the time. One of the pits was like Amgen. Amgen was rocking in the late 90s. And, there was a couple of big biotech stocks that were really, really hot. I was barred from day one from trading any of them. And they just said, like, look, it's so stupid. Like, you think you're actually going to know what these products are, what they do. It has no bearing whatsoever on what we do as traders. And when I say that you have to detach yourself, I've had this conversation a lot with people lately, is that everything you see on the screen right now, okay, in NVIDIA, look, that's a trade. It is not investors. It's not like, not even stock buybacks. Stock buybacks are a negligible amount. It definitely, believe me, stock buybacks do play a role. I don't want to diminish that. But the fact of the matter is, this is not mom and pop going home and going like, oh, I really want to own NVIDIA. Okay. There's a couple things going on. Stock buybacks, again, to a smaller degree, but the dispersion trade, you do have a ton of people that are just taking absolutely unequivocally ridiculous shots in here as well. I'm not going to diminish that either. Like, look at this, the open interest of the 950 strike. Oh yeah, that makes a lot of sense. Look at some of the open interest of the 1,000 strike. Okay, this is what we call some stupid bets. That I saw an article about this morning, that people were actually betting that this stock could double. Somebody bet like almost their entire life savings that this thing could double. How's that working for them right now? So there is a number of absolute sheer stupidity bets in here, but generally speaking, it's a dispersion trade. And the word around the campfire right now is that it's not working anymore. That as soon as this stalled out, okay, volatility hasn't died down, but the stock is actually stalled out. This kills them in dispersion. It absolutely freaking kills them. So the trade very well could be unwound, or you could actually start to trade the downside of it, which is you would see put buyers. And that's what a lot of buddies of mine keep talking about. They're like, when it doesn't work to the upside, they'll try to take a shot at it to the downside, which basically means you buy puts and actually force the product down. I don't see either going on today. Okay. I do see a lot of call sellers though. So apparently nobody wants to lose their life savings in betting that the stock is going to double. So we're back to 855 in NVIDIA. And, look, NVIDIA, it's down 3%. And that's a noose around the neck of not only the Nasdaq, but around the S&Ps. The S&Ps would have a very difficult time rallying out of the hole with that kind of market cap leaning on it, right? But you do have Microsoft, Apple, and Amazon that are still positive. So again, this is where I caution you that the advanced decline line, okay, it's not just misleading, okay, it's dangerous. It's very, very dangerous, because we're just going to have this day where, right now on the screen, there's 60 other products that you can sell, and you're down 17, and people are, starting to position before the FOMC meeting tomorrow, which is exactly what we're doing too. So again, the reality is, your setup, you have to recognize when you're coming into a day, can the market rally back up? Of course it can. NVIDIA can create a bid and market can rally back up. Unequivocally, though, you still have risk to the downside. And one of the big reasons why you have some huge risk to the downside is, okay, if you're not reading into volatility, okay, then you're not seeing really what's going on. I used volatility yesterday morning, and I said to you, it's all wrong. I literally out of the gate yesterday was like, volatility is all wrong. The S&Ps were up over 50 yesterday and pulled back into the close. And if you're looking at it and thinking like, wow, that was an interesting cash close yesterday, but it wasn't. The marketplace was telling you all day long, okay, I'm getting risky. This is actually yesterday's trade action, right? Okay, so we bid up all day. The S&Ps were up 50. Okay, we pulled back and pulled back dramatically into the close. And at the exact same time, if you saw like vol, okay, vol didn't exactly rage into the close. It didn't do anything into the close. Vol was kind of up throughout the course of the entire trading session. So volatility is definitely making a market in here that, again, the only thing you should be paying attention to is its bid. Doesn't matter like how far bid, it's bid, which is saying risk is still forthcoming. There is change afoot again in this marketplace. So be on the be aware. S&P is down 18, positive advanced decline line equals volatility coming to the marketplace. So if vol dropped, I'd feel very differently. It hasn't. Okay. Once again, today, volume in the S&Ps is pretty lackluster. I also noticed in yesterday's trade, and this is something I'll only bring up periodically. Let's see if I can actually find it in here. Okay. Periodically, though, I'll bring this up. I deleted it. Okay. Last night. Oh, here it is. Sorry about that. Last night, option contract volume, 40 million. That's incredibly light. We've averaged 48 million. We've averaged 48 million this year thus far. We only did 40 million yesterday. So expect that to pick up substantially. So trade is light and fluffy right now. Light and fluffy with a side order of cheese. Anyway, we'll see how NVIDIA plays. You know, this is not going to be easy trade as everybody again kind of positioning before FOMC. All right, back over to the SPX briefly. Okay, SPX this week, as we had mentioned yesterday. Okay, you're looking this week at about a $81 expected move. Okay, that's plus or minus 81 bucks. The move today is only priced somewhere around 24. The way there was there were some changes made in thinkorswim. I don't know if you guys saw this, but some changes made in thinkorswim. I've cautioned everybody time and again. Okay, if you have not one second. If you guys have not made a move over, or at least opened an account over here at Tasty, I urge you to, because crap's not working right now. There's a bunch of things that were broken yesterday on thinkorswim, but like think back, it's not even working anymore. Right? They broke it. They fully broke it. I don't know. This could be months before it gets fixed. I'm not even sure they know it's broken, but I'm not real positive on some of the changes I've seen. My entire monitor tab was screwed up yesterday. I had to rebuild all of my settings in here. That stuff really pisses me off because my account balances were off yesterday. So I had pretty consistent issues throughout the course of yesterday. And again, there were both front end, what we term GUI issues, okay, and there were back end server issues, and I could see both. The GUI issues, though, are concerning because this is crap where like this whole front end, I had to rebuild the Delta Gamma Theta Vega. It's a pain in the beep, okay? Really pisses me off. I strongly urge you to have another account open at this time. And again, the place that we're all running to is Tasty, because Tasty lets you do what you want when you want with your money. The platform itself, okay, it's just a different build entirely. I've tried to explain this to people a couple times because like, the features are not there. And somebody was asking me about they're building for Tasty a full futures dome, which is actually really cool. They're going to build a full futures dome, and they have the right group to build the futures dome. They actually have some big time futures traders on the Tasty side of things, meaning guys that even worked at the Chicago Mercantile Exchange. So they know how to build a futures dome. They're going to build a dome over there. That should be pretty critical juncture, forward for Tasty. And then they still haven't opened up their scripting language, but there's big things going on with Tasty this year. But again, you have to realize the design of the platform on Tasty is not to be like, a platform with all the bells and whistles and lipstick on a pig. It's built for speed. And they're starting to finally build out some of the functionality, but I'm not feeling warm and fuzzy right now. Things that scare me are, when they start screwing with the monitor tab, account balances and so forth. There's a lot of issues. Obviously, when if they did change servers, they didn't do it. They didn't connect everything on the back end. What's crazy though is that this screen here, I mean, I know the structure of it. It doesn't exist in the same plane as the other servers, so no idea what they've done. They've broken it. Okay, they've broken it. Tasty right now is owned. I mean, who's it owned by? Well, it's owned by IG, which is a British firm, but I mean, Sosnoff is the number one shareholder as an individual. So believe me when I say, he owns more shares than anybody. I think the only person that owns more than him is like maybe somebody like BlackRock. I think it's BlackRock that owns more shares than Tom, but that's about it. And not by many. So who owns it? Well, the number one individual shareholder by far and away is Sosnoff. So yeah, he's not going anywhere anytime soon. Okay. The old guy still comes out once in a while and does stuff. A little bit of a bid under dollar too. Okay, we have some trades that we have to discuss in here. Before I do so, again, I am going to try to be very patient on placing a few trades. If the marketplace rallies, it rallies. There's nothing I can do. The trades that I'm trying to place as this day progresses, I'll tell you exactly what I am looking for, and I'll clarify which trades. Okay, many of you, okay, are still in the TheoTHETA large and TheoTHETA small positions. There's some rough trades going on in here, but the last couple of weeks we stalled out. And because we stalled out, there's only 59 days left. I'm going to start with the TheoTHETA large. Okay, just bear with me. I need to roll this. Now, I know that those of you that are actually joining us live today, not everybody's in this position, and that's okay. But a lot can be learned from it, right? I'm in a position, and it's the 50-50 calls, and I am short. Okay, that's not good. Why? Because you're trading 5,200. You're like all over the place. That's awesome. Okay, I'm glad I have the camera on so you can actually, see the barf emoji out of me. Anyway, these 50-50s, I need to roll them. Why? There's only 59 days left. I intentionally have been burning them the best I possibly can. When do I want to roll them? I'm going to be honest. When I want to roll them, if I go to the 30-day 1 hour, okay. If we can get back down today, I really would like to roll them right in this neighborhood here. Okay, this 5180 would just be gold, Jerry. It'd be gold, because what it's going to do is, if we sold off a little bit, it's going to bring a little bit more extrinsic premium. That's the time premium, okay, into the roll. Let me show you what the roll looks like. So everybody just calm down. Okay, everybody just calm down. Right now, okay, volatility is coming off a little bit. So it's okay. It's all going to be okay. You know why volatility is coming off? They also assume, look at this, the advanced decline line is getting better. It's not an assumption of a rally, okay? It's an assumption of just a split marketplace today. But, well, we'll see what NVIDIA does. Maybe the CEO being on TV will cause the stock to sell off. Anyway, I would really like us somewhere right around this 5180. Maybe I'm dreaming. It's 20 points lower. It doesn't matter, but that's where the roll would get a lot better price-wise. But let me show you where it's pricing now. We're talking, by the way, when I say what's going to get a lot better, we're talking only about $1.50 to $2 difference, right? That would be it at most. So here we go. We're going to open up all strikes, okay? Captain One Lot rides again. So I'd be buying back the 50-50s. Where am I going to roll to? I can roll out to this end of month, 134 days, right? Now, bear with me. Time out! Okay, there is an inherent issue on thinkorswim. By the way, this is like reason number 532 that I am just infuriated by what's going on right now. Okay, they're ruining my baby. I want you to look with me. I have both platforms up. Here is the /ES and the /ES. I've built both platforms up. What I want you to look at is, we're looking at this July, 134 days out, okay? What's crazy is this is 134 days out. This one is properly labeled. When I say this one, okay, this is properly labeled as an end of month, July 31st. This one, okay, July 24, July 24, July 24. You have no idea where the expiration lies. Do you see the difference? Tasty, okay, has the correct expirations on them. Thinkorswim does not. So whenever I send out a trade, we're now putting June 28th, July 31st. Okay, it's a pain in the beep. If you do not have the Tasty platform, Okay, like there's times where I'll trade on thinkorswim still. I have to look at Tasty to figure out what expiration am I even trading it. I call it, oh, it's the 134-day expiration. Well, that's ridiculous because tomorrow it's not going to be 134 days. Is it? Is it, Don? Anyway, I'm shooting for like 134 days. And I want to do the trade, okay, for just a little bit of a credit. I was so tempted to go to these 5200s. Okay, so here's one thing I could do, and again, I just want to show you a couple of scenarios. I could sell the 5150s. Now, what we'd be doing is picking up from 50.50 and moving to 5150. So I want you to think about the marketplace stagnating. Okay, stagnation in the marketplace, which is exactly what we're seeing, is letting me push my trade further out of the money, push my trade further out of the money. And if the market continues to stagnate, eventually we'll push out of the money, okay? And we'll actually make money on this trade, which is, there is an incredible frustration on my behalf. That is one hell of a rally. I'm just not even gonna, like, that is just one hell of a rally. And we've seen big rallies before, okay? We've seen big rallies before. Let me open up the 5-year in here. You're looking at this rally and you're like, no, man, this rally was bigger. This rally was met with wicked pullbacks in here. Those wicked pullbacks, more than enough to be able to exit trades. Moreover, the volatility in here was big. Oh, they screwed up my drawing sets. There we go. It's back. It's back. My drawing sets are screwed up in here. Oh, they're pissing me off. They're pissing Don off. Anyway, so this is one of the rolls I was looking at, and this roll would be done for about a $25 credit. So that roll's done for about a $25 credit, which it's all right. Okay. I mean, I can get over it. The other opportunity is not to roll to the 134-day, but to roll to the 150-day. Now just bear with me because I don't want to roll this far out. Okay. I don't want to roll this far out. But if I do so, check this out. Check it out. I roll for like a $4 or $5 credit, but then I roll to the 5,200. Ooh, that's like at the money. Okay. No, I don't know what to do. Okay. I think I'm actually going to roll those to the other one. I think I'm going to roll the 5150s. Okay. I think 150 days though bothers the hell out of me. Now, again, I'm going to reiterate exactly what I'm going to do. Right. And I'm prefacing this because you will see these trades be texted out later. Right. And right now I'm heavily leaning towards the ES U24 roll. Okay. Where I roll specifically, okay, to those 5150s, and I do it for like a, like a $20 plus credit. Does that make sense to everybody? Okay. It's critical because Larry was even pointing out, I want to stay in the U24 contract, okay, and not jump into any other contract. I do want to stay in the U24, but and by the way, Larry, they're all U24. So this is U24, this is U24. They're all U24. Not going out to the Z contract, but I like doing the roll for credit. I'm just not pushing quite as far out of the money. But frankly, you're going to get a better rate of decay at the 134 days than 150 days. Okay. Now, there's one issue that I have in here, and this is the big contract, but here's one of the larger issues. Son of a. Okay, this is the TheoTRADE small. Now the TheoTRADE small, check this out. In the smalls, I have a 59-day expiration. I have a 122-day expiration. I have a 150-day expiration. In the small, though, we're coming out of a 49.50. In this one, almost unequivocally, I got to jump it all the way to the August 16th expiration. I think I have to go 150 days here, but there's so much time between, like, a 60-day expiration, 150-day expiration. This is going to be a big roll. Okay, I should be able to push at least another 100 points out of the money. That's why I was kind of hoping for a little bit of sell side activity. Help me out, marketplace. Look, I'll take 11 handles in here because the market's kind of stagnating, but some sell side activity would definitely help me because it'd bring up the extrinsic value, okay, specifically of these 122-day expiration. So it's not the easiest position to roll, but you, again, look for the rolls as the day progresses. Those also in Catapult. I'm also going to roll the Catapult large portfolio as well in here. So I got that going for me. Again, I prefer not to roll. Okay. I choose not to roll while live. I like to send out the text messages and execute the trades. I think I get better pricing when I'm not on here live, especially when the damn camera's on. Okay. I don't like it. Okay. I don't like it. I don't have to like it. It's something I don't want to like. Being live and rolling. Okay. So what I'm saying is I can roll while live. I choose not to roll while live, right? By the way, John was saying, walk us through, the percent decay as a percent of price. Yeah, decay doesn't really work the way you think it does out here. So one thing I try to kind of explore with people, the options that are 134 days, it's really all I kind of want to go to. I can go to the 150 day, but here's the thing. Decay is not about, when we talk about decay and options, most people categorically immediately talk about something called theta, right? Because what you are driven to as a retail client, okay, is to believe that theta is your rate of decay, which is actually correct. It is. But when we're trading out here and we're selling options out here, we're actually dealing in skew, okay? And Vega. Vega is the Greek that's not so Greek. We're dealing in skew and Vega. And what we're actually dealing in is Vega only describes an options change, okay, for every 1% move in implied volatility. That's what Vega describes. We're not really trading the Vega though. Okay, we're trading like the volatility of the volatility of the volatility. We're actually trading the skew, and the skew, in those looks, like this, the volatility smile, and the volatility smile kind of lays down and flattens out as time goes on. And the flattening out, it can happen a little bit between 150 days and like 122 days, but the best part of where that vol is flattening out is this 120 day to where there's like, 70 days left. That's the good portion of it. So if okay, and I don't mind mentioning this, but if I'm all the way out here in the 150 day expiration, at that point, I'm trading a lot of delta, okay? And some of these options still have quite a bit of delta, which implies that at that point, I really need some sell side activity, or I'm just kind of marking time for like 30 days until we get to the better portion of the decay. Okay, I hope that helps. These contracts over here, though, okay, we're not, we're not chucking the cheese yet in them. We're not bailing out of them. Okay, to say this, well, nicest possible way. I've been in much worse positions and come out of it. And the one thing about the S&Ps that I'm actually very hopeful for, there hasn't even been a slight pullback here. All I need is a very mild pullback, and you're golden, pony boy. I said that to my kid the other day. He goes, "Pony boy dies at the end of the movie." I'm like, "Oh, you're killing me." Okay. Anyway, let's continue. By the way, Pony boy didn't die. He screwed that up. Okay. It was Johnny, man. I show my kids some screwed up movies. It's good stuff. So William, the 122 day. I'll consider it, but the problem is in these smalls, okay, there's just not enough juice out there. There's not enough juice in the smalls to go to the 122 day. We're deep enough in the money that I know, market in here is really wide too. We're deep enough in the money. I'll look at it. It depends if the marketplace sells off. I have a better opportunity to jump to the 122 day. But not opposed to jumping out a little bit further because they're both U4 contracts. Doesn't make a difference. That's not going to make a difference. But you better believe I'm going to try to collect. Like I want to get out to these 50-50s is where I want to be. Those 50-50s are at 310. Market on 310. Okay. These little monkeys. Yeah. This is a wide market. I got to actually factor in where this marketplace really is. I think I can get out though to the 50/50s if I bounce a little further out. But again, I'm going to play around with some pricing. So one of the things that, as I said, I can't really do live. Okay. And it's frustrating when I can't do this live, but I have to go in in a couple of different accounts. So I'll actually go in several different trading accounts and I will actually work orders. I have no intention of like, even if I fill the order, it doesn't mean I'm actually going to send that order out. I'll go work several different orders on different strikes, figure out, probe the market where I can actually get the best fill. Okay. And then turn around and say like, oh, all right, well, we're going to do this one because I think I can get everybody filled over there. All right. let's continue. Onward and upward. Okay. All right. Ken was asking a question here. Let's answer one here. All right. What do you do with the short MES 54.50 call? Okay. Look, a May 54.50, May 17 54.50. Okay. Let's go look at the May 54, May 17. Okay. Why would you even roll it right now? Just hold it. Okay. You're 59 days left. You can hold that thing till it's got like 40 days left. It's going to decay. Okay. You're going to decay. You're going to be nice. You're going to nicely decay. So I am going to nicely decay. Do you nicely decay? Some people decay better than others. So I have another one on that's like a 5,300 in here too. That's actually making a couple of bucks. Sorry, I'm looking at a few positions while I'm talking to you. So everybody just hold on. Yeah, the 5,400s, leave them alone. Okay. Everybody's doing something. You need to be doing nothing. All right. So that looks good. Okay. CC was asking, give an example of strikes for an atomic hedge if you opened it today. Right. All right, let's do it. All right, so here's the question. For those of you who are looking for the atomic hedge, because somebody asked about that from yesterday, question then looms. And again, one of the most important things to me is making sure you guys, get hedged or forever hold your peace. I mean, look, the easiest way to hedge, I said this yesterday and I say it again today. If you're not going to hedge, you might look at your portfolio and say like, hey, maybe I'll get out of a small chunk of this. Nothing has to be all or none in this business, right? So if you don't like a position or you're getting a little nervous, the easiest hedge is to relinquish a portion of your position. That's the easiest hedge, where you actually say to yourself, I'm going to get out of like 1/3 of my position. Like, why don't we do that often enough? You should. There's nothing wrong with it. Why not just, bail out of a small portion of the position? You can, even a quarter, a third of the position, because that's the best hedge. Now, if you are looking for a hedge, and I'm actually going to build one in the ES, okay? I'll build one in the ES, and I'm actually going to build this one with a put spread. Let's go end of month, 42 days out. So we're going to go 42 days for the hedge, okay? I'm going to build a 100-point wide spread. Watch this. We're going to close up the left side bar here, okay? So I'm going to come right in here, 50/80s, okay, 49/80s. So here's actually the put spread associated with it. It's a $17 debit, okay? Then I'm going to go out and I'm going to go all the way out. I am going to go to the 122-day expiration. Okay, I'm going to finance this little monkey with a sale of probably 2 calls. Yes, this is perfect. Okay. That one's absolutely okay. That one's perfect because I'll tell you what's going to happen. You're selling 2 of the calls, which are going to collect 50% of these. Okay, they're $18. You're going to collect 50% of them. Yada yada yada. It's going to cover the cost of that hedge. It's a 100-point wide down hedge. So freeze the screen. You have DVR functionality. Okay, enough of this. Let's move onward and upward. This is the one where I would like that. Okay. Anyway, those atomic hedges though, they're critical. Okay. Okay. Why not just say SEP U, okay, at end of month? Yeah, Mark, it doesn't really work exactly that way. So there are some end of month contracts in here, but you got to understand again, all the designations on thinkorswim are screwed up. Okay. If you're going to trade futures contracts, generally speaking, you're going to be a lot better off on Tasty at this point. And that's where we're putting all of the positions. I'm building a new catapult portfolio. It's completely on Tasty. Okay. I'm done screwing with, I would rather change accounts because some people like, you can't label this in here. Good. I'll just open up multiple accounts at this point. I've had it with, I was so furious yesterday that they screwed up all these. Couldn't see Delta Gamma Theta Vega. It only takes 10 minutes to fix. Okay. But that's something, this thing should never break. And the reason it should never break, that means they're actually losing. In thinkorswim, there's some memory on your computer, but generally most of the stuff is actually held server side. Okay. But what scares me more than anything, the stuff that's held on your computer is what they screwed up yesterday, and they screwed up stuff server side, which is implying that even your little memory file on your computer was somehow impacted by the changes that they made. What I think is they changed over servers and they couldn't actually read your user GUI file on your screens. So it's just lovely, just lovely. There's a lot of problems right now. Okay, got a lot of problems with you people. Okay. By the way, somebody said, can you do the atomic hedge in the SPX? Yes, you can do the atomic hedge in the SPX, but you are much better off doing it in the S&Ps because call spreads collect far less capital, and you're simply better off selling the naked ES from a margin perspective too. It's much better, sir. The SPX is a product that, I'm not the only one here at Theo that's actually traded, in the S, but I was just talking about this actually recently with Todd Sweet. By the way, if you guys missed it, we had Todd Sweet on a Wednesday chat. It was actually great. I think it was one of the best Wednesday chats we had in a while. Anybody watch that one? Okay. If not, you should catch it in the archive. It was actually really good. Todd Sweet was actually talking about his career a little bit in, in Chicago and in the pits and so forth. But I traded a lot of index stuff over the years, specifically in SPX, and I'm even old enough to know what OEX is and XEO. Okay, I mean, I missed like the heyday of the OEX, but whatever. It's because I am not a dinosaur. The olden days. Anyway, the truth be told, like SPX, it's still a proprietary product. There's a routing fee. There's a lot of issues with it. Okay, and it's just okay. Like the OEX, you're 100 years old if you traded in there. So anyway, the OEX had some really bad problems too. Cash settlement, but American style. That's kind of a big problem. No one really realized it. Okay. I was there in the OEX days where there's 15 minutes after the cash close where you would see some people run upstairs and try to exercise options, okay, in that last 15 minutes or whatever. That's kind of a large explanation, but I do remember some hysterical things of, these idiots trying to run up the escalator the wrong way, trying to get out faster than other people. Okay. Those are the days. Those are the days. Okay. Yeah. See, Larry, Indy, Jeff. There's CC. There's a bunch of dinosaurs in here. The dinosaurs of the OEX days. Okay. Most people have no idea what the OEX is. The OEX was one of the first major index products. It was the S&P 100, and no one trades it anymore. By the way, products come in favor and out of favor. Okay, but when I came into the business in the 90s, the trade that we did in the OEX was the 1-5, and basically we traded OEX, SPX, okay, against like E-minis and so forth, and there was actually the full SPU. Okay, the original /SP was still around. Okay, back in the days of the dinosaurs, there was still the full S&P. Then they came out with the minis, and no one ever traded the full SPU anymore because it's a completely electronic marketplace. Anyway, when I first started trading, if you traded in the SPX, you had to signal to a clerk to trade your hedge of a SPU, which was in another pit entirely. Okay, and then within weeks of me being there in the 1990s, within weeks, you could actually trade the E-minis right off of your screen, okay, that was in your lap. And if you've never heard me say this before, the screen was like 180 degrees. A Fujitsu tablet, Okay. And I'm lucky to be able to have children now that at 180 degrees right here. Oh, that's off camera. You don't want to see. Okay. That's all right. I'm wearing my Lululemon pants today. I'm very embarrassed. Not really. I'm in my best pajamas. I'm telling you, this camera thing on every single day. Okay. As the week progresses, like there's going to be a baseball hat pulled over the head, like slumped over. Okay. Fridays, come on, man. Okay. You just can't do it. Just can't. I can't be dressed on a Friday. It's freaking 5:30 in the morning. Okay. And right now, okay, I have to commute to work. Do you know what it's like to get up 5:30 in the morning? I get up at about 4:30 in the morning, but do you know what it's like to drive at 5:30 in the morning, 3 miles to work? I was saying that the other day, and I'm like, that is as bad as it sounds. Okay. I used to have to like walk out of my bedroom and walk into the guest house. Now I have to get in a car. It's horrible. Okay. I warm the car up though before I actually even get into it. Um, it's very chilly here in Arizona. It was in the 50s this morning. It's horrible. I know there's somebody like, I'm in Canada and you suck. Okay. That's okay. I get it. I agree with you. You're in Canada. Okay. And I suck. I got it. I got it. Continuing again. Um, all right. A few other things I need to point out this morning. Look, a lot of what we're doing today, okay, and tomorrow, it's a lot of prep for what is forthcoming. And what's forthcoming is a crap load of risk. By the way, take a look. We might be facing some lows again coming up here. I do have a little bit of price action concern for crypto right now. I want to bring this up for just a moment. So a couple people I know, specifically Jeff Bierman, is like, when crypto breaks, it's all over. Okay. All right. Crypto is breaking right now. Okay, do not believe that the crypto market has any bearing, okay, to the S&Ps, but I think that the crypto market is actually trading, okay, in a high correlation with NVIDIA and specifically the Nasdaq. And I'll say that again. I believe that crypto, specifically Bitcoin, is trading in a very high correlation with a handful of tech stocks, one of which happens to be NVIDIA. At this point, okay, this is some big selling in here. You're down 6.5%. It's still rather early in the day. We are literally at lows as we speak. Okay. The reason I'm bringing it up, you can see a situation though where this comes, what I call panic of the disco here. We actually trade down, 10, 15%, even 20% in trading session. There are what they kind of call like old school, like the term curbs could come in here. What curbs basically are, it's like some of the trading actually gets slowed down, circuit breakers. So you can call them curbs, you can call it circuit breakers, you can call it anything you want. Be on the lookout though for a big flush to possibly hit. Okay, Bitcoin is getting tagged right now, and it looks like this marketplace could get flushed out a little bit. Now, with okay, Bitcoin taking the hit, I think that there is some risk back upon the marketplace as the day actually progresses. Okay, some of the same people, okay, that are invested heavily in Bitcoin are the ones that are actually slinging some size in Nvidia. That's not the trading firms, but there's enough, okay, kids living in their mom's basements that are actually slinging size in Nvidia. That's why I'm saying just be aware of it. Okay, that's something. If Bitcoin really starts to get hammered, okay, it's going to be a rough day, in my opinion, for NVIDIA. You could also see the likes of products like Tesla. Okay, this actually has a lot of the same traders. Okay, speaking of Tesla, big bounce yesterday. It's fading a little bit by 2% today. Option order flow in there is not nearly as extreme as it was yesterday. There's nothing really going on. Back to NVIDIA, its option order flow for just a brief moment. Okay, there's still just calls being sold. I just want to make something clear. There's no put buying in here. The number of puts being bought is nominal. There's nothing going on in the put activity right now. NVIDIA is just down. There's call sellers. Okay. There's simply nothing going on. And I don't want you to think that there is in here because I just don't see it. Okay. Other than that, I did see Super Micro. Okay. Super Micro taking another hit. This is also one of the stocks that is falling, okay, with crypto to some degree. You're down about 12% right now. Okay, so no real wild price activity during trading hours. Okay, but in the pre-market, got a little bit wild. Anyway, with that, the pullback in here has not been all that dramatic just yet. One other thing, and I looked at this in the pre-market, you actually have volatility falling with the marketplace falling. Okay, some wild stuff. Okay, moreover, if you take a look at NVIDIA, look at NVIDIA's implied volatility, it's actually coming back down. NVIDIA, you can make an argument that if it stays flat, okay, or if NVIDIA stays in this range for a couple of days, it could actually get momentum back to the upside. Implied volatility is falling. It's actually going to make that trade, maybe worthwhile a little bit again. Right now, though, the trade in NVIDIA, the dispersion trade in NVIDIA is not working. Okay, the dispersion trade in NVIDIA is not working. The trading firms look like they're dumping their calls. They bought calls, they're dumping them right now. The only thing going on in NVIDIA right now is dumping inventory. Okay, and they're not doing it in a huge, whatever. They've traded 500,000 contracts. What's important to understand about that, though, okay, is again a very positive advanced decline line. It's not even that rough of a day. It's not even a 3% hit to NVIDIA. Okay, it's pulling down the Nasdaq to some degree, but people, we're not even down like 1%. There's going to be a lot of positioning right now prior to the FOMC meeting. Okay, what to know about the FOMC meeting? I'll cover that a little bit tomorrow. The one thing to know is that volatility is somewhat elevated coming into it. Okay, tomorrow, the expected move, okay, is elevated. You have about a $43, $44 expected move between today and tomorrow. Okay, the other aspect is simply this, and I'm going to leave you with this. Okay, got to stress this. If you have positions today where you've sold premium, or catapult positions that are rough, roll all of them. Get your crap rolled out today. This entire afternoon, I'm setting aside. Basically, the second half of the trading day today, roll them if you got them. I'm going to let the marketplace look. I'm not going to roll anything immediately this morning, right? I'm not going to hop off air and start texting you. I'm going to let the market open up, even if it rallies back a little bit. I don't give a damn. Okay. The second half of today, basically, in that last 2-3 hours of the trading day, you're going to see me roll some stuff. Okay. I'm going to send out a bunch of text messages, everything from catapult rolls to TheoTHEO large and TheoTHEO small. Roll it if you got it. Okay. And the reason I'm sending out the last 2 hours of the day, you'll have time even tomorrow morning to roll before the FOMC meeting. Really important to me, though, that you do get stuff rolled out, because the shorter duration has a higher delta associated with it, which is implying a little bit more risk. Okay. Speaking of more risk, Microsoft is kind of holding the Nasdaq together to some degree. Okay. Apple's got a little bit of a bid back under it. Amazon, but yeah, stocks that matter. Okay, are taking that hit. Stocks that brought us, okay, to these lofty levels in the S&Ps are starting to take hits right now. Okay, and the hits are very, very mild. Again, I can't stress to you this enough. NVIDIA is not really going down, just flattened out. Okay, Tesla, that's going down. Tesla, this thing couldn't catch a bid to save its life right now, even yesterday. But Meta, not going down. It's just kind of flattening out. But this is the most interesting time right now. Okay. Google, after 3 weeks of being straight up, is taking a little bit of a hit. That's going to be well worth watching. S&Ps continue to kind of decline just a little bit. As I said to you, I would look for the S&Ps specifically right around this 5180 level. Okay. You're like, well, you haven't even traded there today. I know. I would look for them to come back down to possibly like 5180. If I have my opportunity, that is when I would like to roll. So I do have to turn it over to Jeff Bierman here momentarily, and takes us a minute or two to switch over. Okay, takes us a minute or two to do the switch. So give me just a moment, and I'll bring on Professor Jeff Bierman is coming in here just momentarily. Stay tuned.